Worried about inflation? Don't be. In this video, I'm going to show you how homeownership can help shield you from inflation and keep your hard-earned money safe. Hey there, my name is Tony Popat, and in this video, I'm going to talk to you about one of the best ways to protect yourself from inflation: owning a home. A lot of people think that buying a home is a bad investment, but I'm here to tell you that it's not only a great investment, but it can also help keep your money safe during times of high inflation. Stay tuned and I'll explain everything to you. The cost of living is going up. It's not just food and gas that are costing more, but also everyday items. This means you have to be mindful about how much you purchase so they don't bankrupt the family when inflation takes its toll on your finances as well. Homeownership can be a great way to get ahead in life, but it's not for everyone. If you're thinking about purchasing your first home this year and are wondering if now is really the right time or just wait until next year when prices might go down even further, then keep listening. Owning properties helps provide stability because there's always enough cash flowing into an account from rent checks every month. Even during tough economic climates like these ones we have been experiencing lately, and hope that continues, homeownership offers stability and security. Investopedia explains during a period of high inflation prices across the board, there's true things like food, entertainment, and other goods and services, even housing. But rental prices and home prices are on the rise. So, as a buyer, how can you protect yourself from increasing costs? The answer lies in the home ownership. Buying a home allows you to stabilize what's typically your biggest monthly expense, your housing cost. If you get a fixed rate mortgage on your home, you lock in your monthly payment for the duration of your loan, often 15 to 30 years. James Royal, senior wealth management reporter at Bankrate, says a fixed rate mortgage allows you to maintain the biggest portion of housing expenses at the same payment. Sure, property taxes will rise and other expenses may creep up, but your monthly housing payment remains the same. So if other prices rise, your housing payment will be a reliable amount that can help keep your budget in check. If you rent, you don't have that same benefit and you won't be protected from rising housing costs. You use home price appreciation to your benefit. While it's true rising mortgage rates and home prices mean buying a house today costs more than it did a year ago, you still have an opportunity to set yourself up for a long-term win. Buying now lets you lock in at today's rates and prices before both climb higher. In inflationary times, it's especially important to invest your money in an asset that traditionally holds or grows in value. So what does that mean for you? Today, experts say home prices will only go up from here, thanks to the ongoing imbalance in supply and demand. Once you buy a house, any home price appreciation that does occur will be good for your equity and your net worth. And since homes are typically assets that grow in value even in inflationary times, you have peace of mind that history shows your investment is a strong one. Bottom line, if you're ready to buy a home, it may make sense to move forward with your plans despite rising inflation. If you want expert advice on your specific situation and how to time your purchase, let's connect. My name is Tony Popat and I'm a realtor and mortgage loan originator from Roseville, California. You can call me on 916-547-9749. Please let me know if I can help you with anything related to real estate and mortgage. Please like and subscribe my videos on my YouTube channel. Thank you for watching and have a nice day. Bye-bye.